Picture this. You walk into a car dealership feeling sharp and financially prepared, only to leave 3 hours later, wondering if you just signed away your future to Brad, who swore heated leather seats were critical to your family's survival. But here is a number that could change what you do next. According to Consumer Reports, the average person will spend over $200,000 on cars in their lifetime. That is the price of a whole house in many areas. Now, imagine if those car payments instead fueled your dream home, paid off your student loans, or even bankrolled a year of travel. If you are stuck making choices based on monthly payments, not the total impact on your wealth, hit like now. Because today, I am Jim from Jim Invests, and I will show you how the right car decision could mean financial freedom years sooner. Stay tuned, because the numbers I am about to share might just turn everything you thought about buying, leasing, or financing a car completely upside down. Let us dive in. Because today, we are unraveling the confusion around one of the most expensive and most common financial decisions people ever make. Should you buy, lease, finance, or opt for a personal contract purchase, PCP, for your next car? This is not just about what looks good today. This is about a decision that, over a lifetime, could be the difference between scraping by and owning your future. And because most people do more research on which Netflix show to watch than on which $30,000 vehicle to buy, concerned, it is no wonder car dealerships rake in profits, not just from the sticker price, but from a maze of hidden costs, financing arrangements, and add-ons. Before we break down the 4 main car acquisition options, I want you to stick around until the end. I will walk you through a downloadable car cost comparison checklist so you never get blindsided again. And trust me, by the time we get to the full side-by-side cost walkthrough, you will see why this one document could be the single most valuable tool you use before heading to a dealership. But first, let us tackle the most common and often misunderstood method: paying cash. First up, buying a car with cash. This might sound like the purist's path. You walk in, hand over $30,000, and drive away as the sole owner with no monthly payments, no interest, and nobody telling you how to treat your car. No mileage restrictions, no risk of contract penalties if you teach your teenager to parallel park by feel. And for a lot of folks, that peace of mind is priceless. But is it actually the smartest move, mathematically? Here is where the myth gets busted. While you do avoid interest in complex paperwork, serious, you are tying up a big chunk of money in an asset that quite simply is going to lose value the second you leave the lot. Cars are depreciating assets. Think of it as ordering a $30,000 sandwich and realizing it gets smaller, not bigger, every time you look at it. There is another cost hiding in plain sight: opportunity cost. If you spend $30,000 on a car outright, that is $30,000 you cannot invest elsewhere. Say, for example, you put it in a low-cost index fund instead, at a 7% average annual return. Remember, this is an average, not a guarantee, and past performance does not ensure future returns. That $30,000 could grow to over $37,000 after just 3 years. Remember, this is educational only, not financial advice. Consult a licensed advisor for your specific situation. So, while cash means freedom and 0 monthly bills, it could also mean sacrificing future wealth for short-term peace of mind. Now, onto option 2. Traditional car financing. This is how most people end up owning cars. You put down a deposit, say 15%, or $4,500 on a $30,000 car, and borrow the rest, usually at a fixed interest rate for a certain number of years. You get the car, drive it as you please, and after making monthly payments plus interest, you own it outright. But here is a mistake a lot of folks make: fixating on the monthly payment. Dealers know this. They will stretch the loan term to 7 years, shrinking your monthly payment so it feels more affordable, while stacking thousands in interest costs over time. For example, let us say you finance $25,500 after your 15% down payment at an 11% interest rate for 3 years. Your monthly payment is about $810. Over the loan's life, you will shell out around $34,000 in total payments. At the end, the car might still be worth $16,000, so your net cost is $18,000 for those 3 years of ownership. Why the big difference from the sticker price? Interest. Pay attention to your credit score, the age of the car, and the loan duration. Because rates can range from 4 to 5% for those with excellent credit to double digits if your score has seen better days. The longer you borrow, the more you pay in interest. And many people underestimate just how much that adds up, especially when you keep rolling old debt into new loans as you trade in again and again. But here is the contrarian insight. If, instead, you invested your original $30,000 while financing the car, your investments could, again based on averages, outpace the total extra costs of borrowing. Of course, there is risk. So run your own numbers and consult a professional. If you have ever been confused by car financing, hit the like button so I know I am not alone. Let us move on to the third approach, leasing. Many see this as the path to lower payments and newer rides, but leasing is not what most people think. And that is by design. Leasing means you are basically renting the car for, say, 3 years. Your monthly payments are lower because you are only covering the car's depreciation over the lease, along with some fees and interest. For the same $30,000 car with a $4,500 down payment, you might see monthly payments of about $345. Over 3 years, you pay roughly $17,000. At the end, you hand back the keys and walk away, often before the car leaves warranty. So repair surprises stay rare. Sounds great. No repair worries. Always driving new. But there is a hidden cost. When you lease, you come away with nothing. No car, no equity, just a history of payments and maybe a few photos for the memories. Even more, you are bound by strict mileage limits, often 10,000 to 12,000 miles per year. Go over, and you are on the hook for 10 to 25 cents per mile. Easy to rack up thousands in penalties on long commutes or road trips. Let us be real. Most people underestimate how much they drive. If you have a family vacation or regular trips, those charges add up fast. Plus, every dent, scratch, or muddy paw print could become a wear and tear penalty. Dealers inspect these cars with a magnifying glass, so always budget for some professional cleaning and minor repairs before lease return. And if customizing your car brings you joy, leases usually forbid modifications even. Aftermarket window tinting can cost you at lease end. Then there is the psychological factor. When you lease, every 3 years you are right back at square one. Another search, another negotiation, another round of car payment bills. You never escape the cycle, and you never own a car free and clear. But what about the cost? That $17,000 goes straight to the dealership with nothing but fading new car smell to show for it. Sure, you avoid some headaches, but over 10 or 20 years, leasing keeps you on that car payment treadmill. Sound familiar? Drop in the comments which option fits your situation best right now and why. Buy, lease, finance, or something else. Next up, the wild card. Personal Contract Purchase, PCP. This is a hybrid, mashing up elements of leasing and financing. Here is what happens. You put down your deposit, and the dealer calculates the car's guaranteed future value, how much they say the car will be worth at the end of 3 years. Your monthly payments are based on the $30,000 purchase price minus the end value, say $15,000, so they are usually lower than direct financing, but a bit higher than a pure lease. What really hooks people is the choice at the end. You can return the car, pay the final balloon payment to keep it, in our example, $15,000, or roll any equity into your next deal. On paper, it seems like you're getting flexibility without overcommitting. But here is the catch. Interest rates on PCP deals are often higher, and those guaranteed values are set low to protect the dealer, not you. If the used car market's hot, you do not benefit. But if it tanks, the protection is yours. But most people end up trading in, continuing the payment cycle. Run the math. If you use the $4,500 down, the car is worth $15,000 at the end, and your monthly payment is $453. You will pay about $21,000 over 3 years. If you pay the final balloon to keep the car, your total cost jumps to $36,000. If you walk away, you have spent $4,000 more than just leasing. So why do dealers love PCP? It keeps you coming back, contract after contract. It is like a car subscription where the bill never stops, and the deals become more confusing to compare. That is why it is crucial to use a side-by-side checklist before you sign anything. Now, I promised you real numbers, so let us break these out. All using the $30,000 car. Example. First, buy cash. $30,000 spent. Car is worth $16,000 in 3 years. Net cost after selling, $14,000. Second, finance, 11% for 3 years, 15% down. Total outlay, $34,000. Car value at end, $16,000. Net cost, $18,000. Third, lease, 3 years, $17,000 paid. No car at end. Net cost, $17,000. Fourth, PCP, 3 years, $21,000 paid with walkaway. No car at end. Net cost, $21,000. Keep car by paying balloon, $36,000. Car worth $15,000 at end. Notice how the best deal mathematically is often paying cash. But hold up, here's the contrarian part. When you factor in the investment growth you could have had by investing that $30,000 instead, assuming a 7% average annual return. Again, not guaranteed. Serious. You might come out ahead keeping your cash invested and financing the car, even with the interest costs. But this hinges on your personal discipline. Will you actually invest the difference? Or will that cash slip away to lifestyle creep or impulse buys? Every car payment is $1 not invested in your future wealth. Screenshot this framework or grab my downloadable checklist below. You will want to. Return it before your next dealership visit. Remember, these scenarios are based on average data and typical market assumptions at the time of recording. Car markets, interest rates, and used vehicle values can fluctuate. Always double-check against your situation and seek professional advice before making big financial moves. This video is for educational purposes only. Past performance does not guarantee future results. But let us get practical. Beyond pure numbers, there is your actual life. Some people sleep better knowing they truly own what is in their driveway, with zero monthly obligations. Others need the predictability and peace of mind of driving a new car that is under warranty. Will never surprise them with a 4-figure repair bill. If you drive cars until they are held together with duct tape and optimism, buying makes sense. Your per-year cost drops the longer you keep the car. If you crave the latest tech or hate having a vehicle out of warranty, leasing or PCP removes the stress, but costs you more over time. Do not overlook mile limits on leases. Most cap you at 10,000 to 12,000 miles per year, with penalties of 10 to 25 cents per mile over. Tally your actual driving, commute, errands, weekend trips, that annual family drive to see distant relatives, and budget extra if you are a high-mileage driver. And watch for the end-of-lease conditions. The dealer inspects everything with a fine-tooth comb. Think a scuff is normal? The contract might say otherwise, and every scratch could mean a charge. Here is a quick checklist breakdown. Compare this to your own needs. First, how long will you keep the car? If 7 or more years, buying or financing WINS. If swapping every 2 to 3 years, leasing or PCP might keep you in warranty. Second, how many miles will you drive per year? Over 12,000? Lease penalties can add up fast. Third, comfort with repairs? Most major repairs hit after warranty ends. Are you okay with risk and variable cost? Fourth, customization? Want to personalize your ride? Ownership gives you that freedom. Fifth, discipline to invest difference. If financing and investing savings is realistic for you, that can tilt the math in your favor. Make sure you grab my free car cost comparison checklist. The link is in the description. It breaks down every total cost, payments, depreciation, potential investment growth, hidden fees, and more, so you avoid surprises and make a choice you will not regret. Let us wrap up with some overlooked gotchas and money traps. First, insurance rates change dramatically depending on make, model, age, and whether you lease or own. Sporty, luxury, or imported cars almost always carry pricier insurance. Second, maintenance and fuel. European luxury is a treat until you see the bill for a synthetic oil change or premium gas. Your bargain lease might get expensive quick. Third, 0% financing. Sounds perfect, but it is usually only offered on models with less demand and often forces you to give up more valuable rebates. Always compare total out-of-pocket costs, not just the APR. Fourth, loan terms. 7-year car loans mean you pay longer than you might want to keep the vehicle. There is nothing fun about forking over payments on a car with more quirks than your weirdest relative at Thanksgiving. Fifth, timing purchase. End of month, quarter, or model year. Helpful. Dealers are more motivated to deal, but an older new car might be worth a bit less when it is time to sell or trade. And above all, ask yourself what you really need. The average American drives less than 40 miles per day, rarely carries more than 2 passengers, and almost never needs to tow a yacht across 3 state lines. Yet car marketing convinces many of us that we need a vehicle with 8 seats, turbocharged everything, and heated cup holders for those journeys through the Arctic tundra. Be honest, is your car an ego boost, a family hauler, or a get-me-from-A-to-B solution. The more brutally honest you are about your needs, the more money you will keep in your future pocket instead of donating it to the car industry. If you have ever been hit by a hidden car, fee, lease return, finance add-on, you name it, share your story in the comments below. What is the wildest or most annoying extra charge you have faced? You will help the whole community dodge the same mistakes. And remember, you hold the keys. Do not get hypnotized by the monthly payment trap or by shiny new tech that will be outdated faster than your last phone. Do the math. Reference the downloadable checklist. Compare needs to wants before you sign anything and choose what fits your life. Or better yet, your future self's life. Let's us recap. The smartest money move for your next car starts long before you talk to a salesperson. Always do the math side by side. What is the cash cost? What is the true financed? Total. How do the lease and PCP payments stack up? And critically, what is the opportunity cost of investing that lump sum elsewhere? Here is what you need to do. Next, first, download my free car cost comparison checklist using the link in the description. This tool will let you total up every payment, projected depreciation, and investment opportunity so you can see the real cost of every car acquisition path. Apples to apples. Second, sit down with your budget and your calendar. Calculate exactly how long you will keep this car, how far you will drive each year, and how comfortable you are with risk, repairs, and ownership responsibilities. Third, before making the leap, talk this over with a trusted advisor or financial professional. No YouTube video can replace customized advice for your specific situation. Here is how the timeline plays out. If you run these numbers and are honest with yourself about your habits, you could avoid $3,000 to $15,000 in regret over just a few years of ownership. Most subscribers who have used this process tell me they gain peace of mind a single weekend and often spot the hidden fees before even walking onto the lot. For more help making financial decisions that build real wealth, not just impress onlookers, hit subscribe and turn on notifications. Because next time, I'm revealing the exact negotiation tips I used to knock thousands off the sticker price. Drop a comment with your most confusing or frustrating car fee experience, or your burning money question for 2024. I will answer my favorites in future videos. This video is intended for educational purposes only and does not represent individualized financial advice. Scenarios and figures are examples based on averages. Always consult a licensed professional for advice specific to your situation. Past performance does not guarantee future results, but wise planning always improves your odds.